Bitcoin tumbling rather dramatically over the last hour or so. Apparently catching much of the market by surprise once again. I've got to say though, I'm not surprised. I don't think you'd be surprised if you caught the last video. Let's run that back quickly and just take a look at exactly why we saw this setting up. But I don't think we're out of the woods just yet. And as always, if we look at this on the 1 day, okay, we're pretty balanced right now, but we are slightly stacked to the downside in terms of long liquidation risk, because history dictates that a lot of people would have seen these green candles and hopped in long, and history would dictate that a pullback like we're experiencing right now, a localized pullback, is probably going to come around and liquidate some of those long positions. Also, if people jumped in and placed their stops around lows, such as this one here, or more likely here, it's very likely that we could pull back, take out some of those stops, and get back into liquidity down here. So there you go. Hate to say I told you so. We are down some 3.62% from the highs put in just earlier today. And sure enough, we did come through and we did wipe out another round of leverage longs from the market. You can see over the last 4 hours, $131 million worth of long positions liquidated. And look how the liquidation map has flipped on the daily. So we are down now to a cumulative risk of just $214 million, just $214 million. And we're peaking out at something like $115 million, down at $105,852. So that's the good news here, is that wasn't a particularly big move, okay? 3.62%, and we've wiped out, there you go, $131 million worth of longs. But just look at how the liquidation map has changed. That means, once again, my theory is playing out, right? That these loops, these cycles of the lemmings jumping in on long leverage at the smallest little sign of green shoots are getting smaller and smaller and tighter. That is a smaller move than the last little sell-off we saw, the last little stop run that we saw. Okay, the market is still in fear, but the fact that these loops keep getting smaller and smaller gives me confidence that people are running out of steam. Okay, people aren't learning from their mistakes, but they are running out of steam. They're running out of motivation and potentially money to jump in on these leverage longs. We've also got something pretty interesting here happening. The Federal Reserve will hold a payment innovation conference on the 21st with representatives from Chainlink Circle and others attending. This plays into further my theory about the macro environment getting better and better and better. If you caught the video earlier today, you will know that we're expecting more dovish moves from the Fed at the next meeting, and potentially more dovish projections going into further meetings this year and into the beginning of next year. But this is even more interesting because it's very crypto specific, right? According to Chaincatcher, the Federal Reserve will hold a payment innovation conference on the 21st with representatives from Chainlink, Paxos, Circle, and a certain exchange attending the meeting. Here we are on the official Fed website. The Federal Reserve will host a conference on payments innovation, bringing together leading industry experts to share perspectives on the evolving landscape of money and payments. The Federal Reserve welcomes the opportunity to consider a broad range of perspectives on how to further innovate and improve the payment system. We've got the co-founder and CEO of Chainlink speaking, CEO of Fireblocks, co-founder and CEO of Paxos speaking. We've got Kathy Wood from ARK Invest speaking. We've got the CFO of Coinbase speaking, and we have got Richard Widman, Head of Strategy Web3 at Google Cloud, and Rob Goldstein from BlackRock, among others. I think this could be really big. We might well have some bullish gems to take away from that. But to bring it back to markets and where we are right now, we've wiped out a hell of a lot of the long liquidation risk on the daily, but there is still some leverage in the market there brewing. I think the most important thing is we've added to the stack on the short side, right? On the daily time frame here, we're up to nearly $1 billion worth of short liquidation risk to the upside. I think though this down move does still have a bit of room to go. We've clearly got a lot of liquidity down here, and I think it wouldn't be terribly surprising if we saw another lunge down into that liquidity before we eventually turn this thing around. Of course though, that is just my opinion. Could be totally wrong. We could just hit rock bottom from here. It's really totally in the balance. But we called it, we saw it happening, and as long as the lemmings keep jumping in on too much leverage, this is going to keep happening. But like I say, the loops, the cycles seem to be tightening. The leverage bulls, the retail bulls, the high leverage trading maniacs seem to be running out of steam, at least for now. But as always, purely my opinion, just what I'm looking at. Nothing I say should be considered financial advice. Thank you so much for watching. Catch you in the next one. Bye.